Well, hello, Josh Thomas, mortgage broker coming at you, and I will refrain from ho-ho-hoing despite the season. So anyway, hope everybody is having a wonderful season despite the crazy year it's been. But I just wanted to take a couple more minutes and talk mortgage with you. I get a lot of questions a lot of the time about rates. So 17 years I've been doing this. The first 8 years I was a mortgage broker. Then I worked for an awesome company, as many of you guys know, called Academy Mortgage. They were fantastic for 8 years that I was there. But then the market kind of changed. And when the market changed, the rates came down, and Academies and many other lenders did not. But the broker world most definitely did. And so in 2018, I made a change. Almost exactly 2 years ago, I made a change and came into the broker world. And it has been phenomenal ever since. The broker world is traditionally known for lower interest rates, but they've also had a reputation of rough closings, slow closings, very complicated, and that's because of the go-between nature that they are. But I've been doing it now for a couple years and have had the best feedback from clients that I've had in years. Fastest, smoothest closings in many ways. Of course, it does take a whole lot more effort on my team's part in order to make sure that we're managing the appraisals and managing the underwriters and the lenders and just the different pieces that are now kind of on us to manage. But because it's giving a much better opportunity to my clients, I have loved it. And so I just wanted to kind of break that down a little bit. Why? Like just this morning, for example, one of my old friends and neighbors from my old neighborhood called up and asked, hey, this is the rate quote I got from somebody else. How are you? And after going through it, for the exact same interest rate, we were able to give him $4,000 savings in closing costs. So same interest rate, but $4,000 cheaper, which is kind of a cool deal, especially noting that we've been doing this for 17 years, same exact job. And we're able to get closings done quickly, smoothly. We know how to get the hard deals done, the ones that everybody else says can't be done. So it's pretty cool if we can offer that plus a lower price, right? And so anyway, how is that? Why do we do that? So here's basically kind of how it works. So in the mortgage lending industry, as you guys probably know by now, anybody that's talked to me has heard all about the 5 main lenders, right? So you've got Fannie Mae, Freddie Mac, FHA, VA, and USDA, and those 5 entities represent easily 95% of the loans that are done in the United States. Those 5 entities, you can't walk in the door as a consumer and borrow money from them. That's not how they work. What they do is they purchase large pools of money from the lenders, one mortgage at a time. So they'll buy loans from Mountain America Credit Union, America First Credit Union, from Wells Fargo, from Chase, from whoever, right? And that's where that business comes in. So when they purchase, that's that loan that puts the money back in the bank's pocket. So the banks aren't actually lending any money. Banks, credit unions, anybody. It's all Fannie Mae, Freddie Mac, VA, FHA, whatever. Right? So when you understand that, then you got to go, well, where do they get their money from? Well, they get their money from the bond market in Chicago, as they trade every single day, kind of like Wall Street. It's similar to that, and as the prices go up and down, then so do interest rates. And so when the demand for the mortgage bonds are really, really, really high, like they are right now, then the yields on those come way, 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 way down. And that's I've talked about that in previous videos just a couple weeks ago, and that is a really common tool that the feds use in order to kind of manipulate our markets. Well, why is ours cheaper? Well, you got that baseline. That's the cost. Whatever those costs are, they go up and down with the market, but that baseline, and then all the lenders will put their margins on top of that. Okay, and most margins are going to be running somewhere between 4 and 6%. That's the normal banking. You know, when a bank runs a special, they're probably going to run somewhere close to a 4%. If they're a normal bank or credit union just kind of doing business as usual, they're going to be 5 or 6%. Which, if you stop and think about that, that's a lot of money, right? If we're doing a $300,000 loan and we've got a 6% margin, that's $18,000 that the bank is planning on making from that loan. It's kind of a lot, right? And so, but welcome to the banking world, right? Maybe we all ought to open our own banks. But if you take that and then you combine it and you kind of look at the different lenders, you'll see some lenders, some days they'll reduce their margins or whatever, maybe down to 4% or something. But the reason that we are able to operate and so frequently, inexpensive for borrowers is that we are only operating on a 2.5% margin. So in the broker world, it's a little bit more obvious what the margins are. We have to disclose that. Our margin is typically a 2.5% margin. And at 2.5%, right out of the gate, we're about 1.5 lower than your typical bank when they're running a special. And so I like to use Quicken as an example because I broker to Quicken, and people can go directly to Quicken or Rocket Mortgage, whatever you want to call them. But when you go to Quicken and you get a quote from them and you come back to me, and then I go to Quicken for you and come back with a quote, those two exact same quotes or exact same borrowers, you're usually going to see banks. Sorry, I keep saying different words. For the same bank, same borrower, you're going to see about 1.5 higher, the one that went directly to Quicken, and the one that I was able to do would be cheaper. So 1.5%, $300,000. That's going to be $4,500. That's pretty typical of what we see. So pretty cool. Just here trying to save you money and benefit you so that your holidays are even better. So anything you need finance-wise or mortgage-wise, or if you want to just chat about some things that you're thinking about, please give me a call. I'd love to help you out, but that's part of how we're operating so effectively this year. Our margins are much, much smaller, very aggressive in the marketplace. So that's Josh Thomas, mortgage broker, coming at you, trying to save you some money. You have a wonderful holiday season. And then let me put my legal stuff here up on the board so that you can see, well, if I can learn how to work my video. I hope this is funny for you. I got to put my legal stuff on there so that way everybody can see who I am. All right. That's that. You have a wonderful mortgage holiday season, or mortgage holiday. Merry Christmas. We'll catch you guys.